Hi, I'm Steve, and welcome to Bytes by Standard Chartered's Global Chief Investment Office. What to do if the US dollar weakens? The US dollar is expensive by some measures. Staying invested in a globally diversified portfolio is a good way to hedge against any dollar volatility. Will the US dollar remain as the world's dominant and, by some measures, the most expensive currency? Speculation about a possible Plaza Accord-style agreement to weaken the dollar has added fuel to the fire. Should investors worry? The US dollar continues to be the most dominant currency from both a trade and store of reserve perspective. While the dollar's share has admittedly reduced in recent decades on both fronts, data from the Bank for International Settlements (BIS) shows the greenback's share in payment for global trade remains significant, as does its share as a global central bank currency reserve. Investors are attracted to the dollar to make riskier investments targeting higher returns such as in equities and high-yielding bonds, or park their money in relatively stable, high-quality assets such as government bonds to preserve capital. Together with the free movement of capital offered by the US, these factors make the dollar the dominant currency in payments for trade and as a vehicle to hold reserves. We believe this dominance is unlikely to end soon. This does not mean, however, that the US dollar's value will not go through cycles. This is where more significant movement over a multi-year horizon looks more plausible. What do US dollar valuations tell us? On a multi-year horizon, though, the US dollar is more likely to moderate than continue moving towards ever higher valuations. Similar moderations in value were observed in the second half of the 1980s and the 2000s. A softer dollar is likely to help President Trump's efforts to cut the US large trade deficit. In theory, a more moderately valued US dollar would help rebalance. Does this all matter for investors? The most important takeaway for investment portfolios is that the ultimate currency exposure of your investment matters. Today, we favor a greater tilt towards US assets, given relatively strong US economic and earnings growth and trade and geopolitical uncertainty clouding the outlook of the rest of the world. However, in a scenario where the US dollar weakens on a multi-year basis, non-US assets are likely to do well. That said, we are not there yet. Thanks for watching. See you in the next episode.